Hey, what's going on, guys? I'm just going to be going over the weekly trade review. I'm going to be talking about some of the losses as well as some of the wins because I feel like these weeks are weeks where uh, the signs are not super duper clear, right? We obviously had a very controlled market sell here. There wasn't really anything that was telling me that this sell was going to continuously capitulate just through basically like your basing action happening here after a very large panic day, I guess we could say, with a -4% move on the NASDAQ. And these are all just pulling down essentially into discounted opportunities, right? When you take the August 5th low to the current swing high and you look at the entirety of the range, we've now retraced 61.8% of the entire move. That's just simply put your 618 retracement, right? This is a very, very, very pivotal spot in my opinion for the Nasdaq as well as the S&P. We go over into the S&P now, and we can see how this is also just right around that golden pocket area at the 618, right? So all the targets have been met in terms of looking at the distributive top here, where we were really, really bearish everywhere throughout this range. That led us into a lot of these gap fill targets, right? We had one right here just beneath the 565 breakout level, right down here into 561.40, right? And then we had another one on the NASDAQ in the same general area, right? So we don't really necessarily need to see any sort of mass capitulation, right? We already filled the gap over here within the NASDAQ. We don't need to see any sort of major panic day because one, the VIX is very, very well controlled on this recent sell, right? Obviously, this didn't really get any crazy move in vol, and now it's obviously cooling off here and failing out a resistance, right? So we go back over into Qs and we can obviously see how this was all just a really, really nice market sell, leading into some of these gap fills, leading into a discounted range. And now when we go into the hourly chart, what I noticed here throughout most of the week was obviously we had an NWOG here from Friday into Monday, right? That never actually got even tested into. So that level being right around here at 483.47, right? And then from the lower ends of the chart, what you're getting is very controlled selling, not a lot of volume. You're actually getting a lot of your volume occurring here at the lows, right? It's all happening here towards the lows of the trend, right? And when we go take a look at the daily chart and the daily candle structure, we can kind of see how there's a lot of gaps left behind in the chart here. You could also kind of see how right around here you have one at 502, which is a back test of this low here from January. It's all kind of tying in a similar area up into 503.50. So that's a very, very easy target to keep in mind of as we try to look for the upside and the reversion here back for the upside. But we have an unfilled gap here at 502. We have another unfilled gap here at 491.80, right? So the market does need to obviously get above particular levels, claim those as supports, maybe reclaim or revert into some of these moving averages, and then obviously get above those. Obviously, base these new fresh bear gaps as now potentially bull gaps and progress on those, right? So we would be looking for pops and subsequent higher lows. However, one big thing that we do have leading into the new week would be FOMC. So there's a lot on the table right now. Patience is going to be very important. I think FOMC is going to be a very big thing here for the market as we lead into obviously that being a footprint candle, which leads us into Q2 and Q2 earnings, right? And there's really not much we could say or do here other than obviously have tight risk on either end of the trade. Obviously, shorting the pops are going to work, but yeah, let's dive into the week and talk about some of these trades. Um, so initially, what I did here throughout, like basically when we're looking at this whole entire week, Monday was the gap down, right? And I figured that would all obviously be certainly a gap down here for Monday because we had CPI this week on Wednesday. So everyone was trying to time this as the low right around here. Everyone thought that this was going to be the low in the reversal candle that pushed us higher. You guys got to keep in mind though, just as I was talking about in the general chat here today, all of this stuff is predetermined into obviously them wanting to get optimal fills leading into data sets, right? So we had CPI on Wednesday, right around here, March 12th, Wednesday, and we had a bear NWOG, right? So basically what I was looking for here, guys, was obviously building out some long side trades for this to be a reversion trade here back to the NWOG by CPI. And the reasoning as to why was they were placing a lot of very large sellers in the dark pool up here at 492-ish, which is the top in the entire fill of that. And they were obviously just really failing to displace beneath these lows, right? We had a lot of range building up within here. However, we had a really nice reversal and a 3 lower low accumulation. That was my first really nice win on the week on this reversal day around here. And then obviously we got the mark up into CPI. So that was about a 468 all the way up into 480. That was a really nice risk to reward trade, right? Basically, I was just looking at these smaller time frame lows that were getting a breakdown failure, right, in a 3 lower low accumulation with obviously this general area of the bear gap, or just this swing low over here to be retested, because we got the gap down. We never had any true strong structural retest within the gap, or just simply put within a support resistance flip, right? We just kind of bled beneath, and then we never got anything like that, right? And then the volume just started to dry out slowly and gradually as we started to make these new lows and bid into those new lows, right? So this breakdown bar right over here on the 15 minute was a really nice indication that things need to revert here back to the upside for the time being. And they did, right? It was a fantastic trade. We go into the 5 and we can kind of see how that reversal was very, very, very prominent, very easy to see. And you got one more dip opportunity into CPI, which was essentially just a higher low, right? So data did mark everything up. However, whenever you're looking at the markup, you need to understand that, okay, yeah, we did mark up from CPI, right? This was a really, really easy reversal trade for the time being here back to the upside. But at the same time, CPI was basically just putting in these wicks, and it looked like it were to be a little bit weaker, right? This was not a big pop through CPI. And then obviously right off of the open, we actually failed that level, right? We never got back above that level. So that's my first mistake on the week, was right around there, because I said, okay, I'm going to wait for, I caught the longs the day before, and then I was like, all right, I have a couple more longs on CPI. Let's just see what happens. But I want to really size an IV crush a little bit more heavily because I didn't think that they were just going to mark it up through CPI and then pull it back and then just continuously gap and go all the way back up in a very quick fashion here back to the upside for that gap fill target. What I thought more or less they would do was pop it up and then create that overnight gap, which they did right around here, right? And then obviously off of the overnight gap get some sort of reversal. So what I did was I tried a long here on this day whenever things were trickling down and they didn't really look too great. And then Trump was speaking into 10:30, so that's my first mistake. And I was like, yeah, these ads right here on this little 5-minute, 15-minute base, they just really weren't the greatest ads, because there wasn't any true level in mind that had a lot of really, really, really strong thesis behind it. There was no strong thesis behind the level whenever I was longing around here. What I was more and less waiting for, and what my trade plan was really revolving around, was just taking swing low, swing high, looking at a discounted high or low, right? And that's what I did afterwards, after taking a loss on the initial attempt on the long side trade. So this over here in the climactic lower low type of scenario was really, really nice. If you guys go over into the S&P now, you can kind of see how that general area as well on the S&P was really nice. As you guys can see, the 3 lower low happening just around that general area, right? So this was all just a really, really, really easy long side trade in this general area, but it got a little bit difficult throughout most of the week. Like I said, Trump was speaking right after CPI, so it was better to just let everything play out for itself and just wait and see where the signal was obviously shown from. And whenever we're looking at the chart that looks like this, it was basically just the 618 and the overnight gap fill just around this general area, and they ever so slightly did not fill the overnight gap, but it was still a really nice opportunity to look for the long right down here as things started to stall out. And this was Wednesday. This was CPI, right? So this whole entire move of price was a move up, call option. People got call option positions obviously got cooked, vol compressed, and then everything kind of moved they moved everything lower to just reaccumulate a higher low, right? So they were obviously accumulating most of these general ranges throughout most of the week, right? And I knew that. Okay, so we had the overnight gap. We started to accumulate the overnight gap, and you could see through the character of the leg here back to the upside. It just rejected the top of the overnight gap, right? And it put higher, lower highs in on the top of the overnight gap, right? So we never had that true pivot and that true strong absorption of all supply remaining towards the top end of the daily range, right? And then obviously that led to another pullback, right? But that pullback, we're all just simply put, just simply measuring what's going on towards these lows, right? We pull back into those lows, okay? And I caught a couple long side scalps in between, just around here. A couple other ones around here, right? So I was trying to get my hands on a position that was like maybe looking for the continuation, but I was just getting a little bit of leeway on a decent looking entry, right? For example, a higher low in the discount right off of this area, and then seeing if it could follow through up towards the highs and scaling the highs. There's nothing wrong with that. But I wasn't so super confident in this being like a finalized like accumulation to obviously have price push back up to revert to the mean, right? So what happened was we got through CPI, we got into PPI. There was no signal through PPI, and what PPI did and what that whole like pre-market kind of did was it pushed us lower, it put in lower highs, and then it started to push us lower and lower and lower on decreasing, weakening volume, followed by a sweep of this low, right? So this was sweeping the current lows of where we saw a previous 3 lower low happening at. So now we can essentially see this as like almost like a 4 lower low accumulation on the hourly chart. It's not going to look the prettiest, like I said, but it was still really nice. We go over into SPY and we can see how SPY had a really nice depiction of that also. And then obviously leading into the end of the week, we had that pop here back to the upside. So really nice opportunities on the long side trade there throughout the end of the week, right? Obviously, it was more of a broader market correction because there was a lot of stocks declining, and the advanced decline data was a little bit like, okay, yeah, there should be more of a broader market correction. We go over into what's the other one that I was looking at? What did I do? Oh, I took a loss on Target. Not really much really not anything I should be doing, to be honest, right? A lot of the volatility, like I've been telling you guys and telling you guys for a very long time, a lot of the volatility remains in Mag 7, right? It remains in the areas where uh, there's a very important pivotal window in all of these tech names, right? So the reversion trades are going to be really nice. As you guys can see, I mean, this is a bounce back of 2.42% in a singular day with no data on the NASDAQ, right? That volatility is absurd, right? And we're not getting any sort of crazy juiced up VIX. So options are obviously playable, right? And like I said, we have so many gap fill targets here back to the upside. They're pushing price, I think, very aggressively downwards into QE. Well, not necessarily into QE, but into FOMC, and then that could obviously be the binary event that results in a nice change of hands, right? Has there been any clear signal in the daily chart? No, there really has not been, right? But at the same time, guys, we don't really need a vol event like the August 5th event that happened here. I think what this did was it caught a lot of people off guards, and it really started to develop a nice, strong, sturdy change of hands here for the bulls on a candle that looks like this with VIX exploding into those highs. All the way over here, right? You guys can see how these levels were damn near the COVID levels, right? 65 VIX at one point on that day, right? So there's going to be a mass hedge kind of taking place there, and dealers having to hedge that general move, right? There's going to be a lot of people shorting the whole, and that's what obviously ripped us higher, put in a macro higher low, and then obviously pushed us all the way back up into new highs and eventually a breakout leading into that December OPEX, right? Then we got distributive through the OPEX. We're pulling back now, and now those flows are returning back into the market that were expiring through January and the December chain, right? So if we could develop some sort of support and Vanna Charm can start taking over, this can be obviously a trade that results in a whole entire move all the way back up into this previous distribution range. But only time will tell with that, and I'm obviously leaning bullish, but I could obviously flip bearish on pullbacks that look like they're very, very weak and very, very minimal money being built behind those pullbacks, like reversion here back to the upside into those bear gaps. And then if they start selling off really heavily again, I mean, this can be a whole entire different schematic than we're thinking of at the current time, right? So yeah, really, really, really slow, boring week for me, and kind of just been stopping out on winners. Lost a couple trades, won a couple trades. The wins were bigger than the losses. We'll go over into Tesla now because that was my biggest win on the week. Just as the same thesis as we're talking about with the CPI reversal, as they were putting dark pool asks up into the upper bear gap closures on the indexes, we could obviously look at the equity market and say, oh yeah, a ton of these are very overextended here to the downside, and they're going to have to revert here back to these gaps as well, right? Sorry, I had to take a drink. But yeah, so with this one, guys, this was Tesla, and this was my CPI long, alongside just having some SPY positions built from the lower ends of that range leading into CPI, right? Just because I thought, they'll pull it down into CPI, they'll pop it back up, like to retest particular levels into CPI, and then obviously people might try to think that's the bottom. You could sell off of that opening pop, right? And I thought the pop could be a little bit bigger into the gap. It wasn't. Not the end of the world. But a lot of these other ones could bring a little bit more of a bigger pop, right? So you don't always want to just look at the indexes and say, oh, okay, yeah, like if everything looks like it wants to pop and I take the indexes, I'll be okay. No, because there's going to be a lot of, multi two-way directional type of volatility happening in some of these other names like Tesla. So this thing is completely fell off a cliff ever since this lower high over here of 40% in less than a month. That's clear overextensions to the downside here, guys. We obviously have some unfilled gaps back to the upside around these general ranges, right? We have about 279 being one. We have another one right around here at 262 being one as well. And everyone was trying to time bottom just as they were over with like the indexes over here. They were trying to time bottom on stuff whenever Tesla was filling the gap. March 7th, right? And there was still some gaps beneath it, right? So March 7th was right over here. That's whenever Tesla filled its election gap. A very, very large gap. Obviously, there was a lot of big money built behind that. So this isn't anywhere where you would really want to short Tesla from. You kind of just want to wait for confirmation on what's going to happen around that gap and then say, oh, okay, yeah, now these things are gaining strength above the gap. Let's obviously take this for reversion back to the upside, right? They had enough supply in mind here to dump, to push it lower, even to fill the very, very, very bottom gap here, which is the earnings gap right before the election. So this is a double gap chart. And we had a very large level in mind here as we filled the first gap right around here. It was kind of about, if you take a look here, 265 is a very big time level on Tesla. Right beneath that, we had 251 being the gap fill. So everyone was thinking, from the last week's lows or right around here on this Friday, they would stick to that range and send it here back to the upside, and then it completely capitulated the next following day, which was expected. Very, very large volume. And then what happens is they take out the previous day low, they hold it, and now it's a really nice reversion trade here back to the upside whenever you start seeing these very, very large buyers with a very big volume footprint. As you guys can see right off of the open, I mean, this traded 13.3 million volume in the first 15-minute bar and ripped 4% right off the open, right? So this was a really nice pop of about 6%, and then obviously they took it into the previous day low. They couldn't hold that, and we had a really nice strong reversal candle here on the 15-minute that completely swept everything out, and it was a breakdown candle failure on the 5. Not a big fan of the 5-minute chart, but yeah. Now we're just basically looking at lower highs afterwards. I bought into the lower high, and I was like, all right, I'm swinging this into CPI as well as with TSLL. It's a 2x leverage bull ETF, I believe, for Tesla. And then it popped all the way back up, and it got right into this gap territory. And then that's whenever everything started to pull back and fade once again, off of like the bottom progress range of the election gap right now, because we lost the election gap, right? So that's also another thing that you really want to keep in mind, right? We lost the weekly level and an election gap. So these are not multi-day moving type of swing trade opportunities. These are just reversions back to the upside based off of everything aligning properly into those data sets, right? Everything got hammered into CPI, right? So a lot of these are going to get really, really, really nice bounce back reversion. I mean, Tesla right over here, guys, this was up 7.6% for the day. That's a really nice common trade as well. You go over to TSLL, I'm sorry. Right around here, TSLL plus 15% on the day. So you don't necessarily need to really trade like, oh, I need to trade weekly options. No. You could trade some shares. You could trade some commons for a quick, 10, 15% on some of these leveraged ETFs, right? So really nice area to pick apart a few opportunities and get in and out quickly for quick gains, and then obviously look to roll those profits in a little bit later on after we get a very clear depiction of what's going on with these daily charts, right? I mean, these can pull back, put in low accumulations, right? And then this could be an area in the market where you want to get really heavy and you don't want to have a lot of cash, right? And you have a lot of profits built behind, playing these bounce back trades very nicely and obviously having the discipline to cut those. A lot of people don't have the discipline to cut a trade that bounces, but they don't have, like, they can't admit that, oh, I didn't catch bottom. These are not guaranteed. These are not trades where we're looking for bottom. These are not trades where we're looking for 20-point moves in the Nasdaq. There's no sign of that happening just yet, right? We obviously have some sort of stoppage candle here on the weekly chart with QQQ. And this is now just very, very, very close to clinging on to the last week's low. And now we're in the territory of where we had, like I said, gap fills, and we also had areas where the massive summer change of hands was happening from. And this is also in the discounted range off the golden pocket. So only future price is going to tell us what's going to happen in the overall market, right? Obviously, we have some names here on the menu here for the upside as well in the Mag 7. Obviously, we go over into Mags, we can take a look and say, oh, okay, yeah, record high volume on Mags. The previous record high volume was the distributive top. Now we're getting reversal candles closing above previous week low, right? And we're getting very, very large volume on a lot of these daily candles, right? So there's something going on in terms of this being an attempt, I should say, of massive reaccumulation happening in the golden pocket. But obviously, just being able to read the accumulation is far different from executing a trade, right? So next week, like I said, we have FOMC. I would love a gap down, and then obviously that accumulative look into FOMC, and then that's kind of the catalyst here for the upside to then go push into the high 490s on the NASDAQ. I think we're going to get low 490s pretty soon. The market has to claim some of these previous levels as newly found supports, right? I would love to obviously claim into the bear gap, into the NWOG, and then obviously look for higher lows on top of that after lower volume sells at lower high attempts. But yeah, very controlled sell in the market. I've just been picking apart like scalps to the long side. Lost on a target swing trade. I didn't really lose on any other swing trade this week. I still have one on Google. And then we're obviously looking at Microsoft also being a name here on watch here for for the future here. I mean, this is a really nice depiction of like a 3 lower low happening on the weekly chart, right? You have your first low being like a pretty large wick, second low swept liquidity, third low dug even deeper beneath liquidity, took out these buyer stop raids at the previous week low, and then eventually got a hammerhead candle closure above these August 5th lows, right? So this is at August 5th lows. Obviously, we have a very, very big weekly opening gap area to play off of, which is also tying in really nicely with that August 5th low. And as you guys can see throughout most of the price action happening over here on Microsoft, this would be where we would potentially be looking for like lower highs now at the third climactic lower low, this progress gap being claimed, and obviously then taking some structure developing afterwards to then go target into some of these other areas and eventually all the way up into these very, very large earnings gaps that we've extended away from and actually not pulled price into. We've never pulled price into these gaps, right? We never pulled price into a lot of the bear gaps that are in some of the Mag 7 names, right? We have a very large NWOG within Google, and we also have a very, very large earnings gap pull down here that never pulled into the earnings gap itself. We never had any true strong collection of liquidity within that area, and then obviously a downward spiral afterwards. We just kind of had price extending away from a lot of these gaps. So these are terrible shorts down here, in my opinion. And obviously, there's very, very, very big targets in mind here on reversion back to the upside for a trade. And Google and Microsoft are the cleanest, in my opinion. Obviously, we have Tesla as well, but I think this one kind of needs to pull back a little bit more. So just by the daily candle structure and just by like the volume here towards these lows and just by like the gap being left behind, the whole entire gap didn't even fill technically down here from 217 into 213.65 is the entirety of the fill. So there's still a little bit of downside risk involved in some of these names, but I will be looking at those dips very, very carefully, but also very, very passive aggressively, as if, you know, if price wants to obviously develop something that's very clear, and then they keep on trying to sell off the highs, and they're bidding the market a little bit lower on the dark pool, then obviously that is probably going to be something that reverses us here back to the upside. And then obviously after subsequently to that, if we start reclaiming levels and we start reclaiming like the 20-day and whatnot, Vanna Charm can really start to pull these things higher and higher and higher and higher. Into, you know, a time where we see potentially a redistribution throughout the summer, and a further decline into the end of the year. So yeah, I just see this as a buying opportunity. You could see throughout a lot of these candles and their structure, there was a lot of very heavy volume occurring around these general areas, and it was a lot of buying, right? There was a lot of buying in these overall areas, and this has just been something where, you know, a lot of people are trying to buy the gap fill. They sell it off through the gap fill. They're collecting more at a more optimal fill, and they're just keep on accumulating until it gets into a discounted point where everyone's already washed out of the trade, right? So yeah, that's basically what I have here for the market moving forward. It's going to be a pretty boring week. Not necessarily boring, but it's going to be very, very short and to the point. I'm going to follow my plan. I'm going to make money on my plan, and I'm going to be done for the week, right? So, yeah, overtrading will also kill you in a market like this. So, we'll see. Obviously, from a sector perspective, they sold off consumers very, very aggressively on like a rejection point off of the previous all-time highs, right? And now this is pulling into areas where, okay, we can maybe find like some sort of weekly higher low, but that doesn't look good at all. That candle does not look good. Nothing looks good about that. I feel like the market's preparing to get out of the risk-off rotations taking place here. Obviously, it's not the entirety of the sector. You have names like MO still performing very well and holding up very nicely amidst the market sell. You have names like PM that still look really good. You have names like, I don't know, the other consumers, Pepsi. Got a nasty gap down, right? Coca-Cola kind of rolled over a little bit, and then I think Cost Co. is kind of what really plummeted the sector fund, as this is the biggest holding within that. So, and also Walmart, right? So it's not just fully transitioning risk off. It's not. There's a lot of risk off equity that remains relatively strong. We go over into like precious metals. These remain relatively strong. So there's no clear sign that the market wants to really transition risk on just yet, right? We go over to Bitcoin. We can see how like that's kind of deciding on what it really wants to do here. Still no true retest on Bitcoin yet that makes total sense. Just trying to formulate some sort of interim bottom off of like a discounted range from our previous low into the current high. So I guess we'll see what goes on over there. It's filling out a lot of imbalance on the daily candles. So this could obviously be a clear indication on what is going to happen in the equity market. But as of right now, I see nothing that's really too shortable until we get a pop. So with that being said, I will be looking for the long side trade, and then obviously we will reevaluate as the pop happens, if it does.